Okay, good morning, good afternoon, good evening from wherever you're watching me from. Welcome back, everybody, and welcome back to the channel. Today, we are going to look at how you can read and understand candlesticks. As a trader, one of your ultimate powerful technique or your power as a trader to be able to read and understand candlesticks can determine your success as a trader, because it's candlesticks that are going to use to communicate with the chart. In real human life, we communicate with languages. For instance, English, French, Spanish, any kind of language. And if somebody speaks a language you don't understand, or somebody writes a language that you don't understand the characters, you might find it very difficult to even understand the concept the person is trying to put across, and you feel like you are dumb, right? You feel like your brain becomes blank because you don't understand the simple basic concept of the language, so you can't even interpret it. So in this world, we don't actually see with our eyes, but we see with our brains, because your brain can only interpret what it has learned and what it can understand. So the same happens in trading. As a trader, candlesticks are the language, they are the characters that we are looking at on the chart. So to be able to understand, to read and understand candlesticks can aid your success as a trader. So as either you are a day trader or swing trader, any trader is a trader. So far as you are trading on the chart, you must understand candlesticks to be able to interpret what the chart is trying to tell you or what is happening on the chart. Most people see the charts as very mess, right? You see the chart to be very mess. It's because you don't understand the basic characters, the single individual characters of the chart. You might not be able to interpret it. So when you look at it overall, you don't understand it very much, but you still want to trade, right? So you must understand candlestick before you trade. Okay, so today we are going to look at how you can actually understand candlesticks, how you can read candlesticks, and how you can put them together to form statements, as simple statements or as simple ways the market is trying to tell you something, just like any language does. Okay, so if you're here for the first time, I'm Setowas, and be with me for this time. Welcome back to the channel. Let's begin with today's lesson. Okay, so when you look on the charts, you realize that in the actual sense, the market is either moving upwards, or you see that the market will either move upwards or market will either move downwards. These are the only moves the market will move. Either you see that the chart is either going upwards or the chart is going downwards. Now, for the chart to be able to move upwards, which means a candlestick must move upwards. For a chart to move upwards, candlestick must move upwards. Let me increase the size of the candlestick so that you understand it. So for any chart to be able to move upwards, which means there should be a candlestick which is moving upwards, right? And for a chart to be able to move downwards, which means there should be a candlestick moving downwards. So you see at this point, the market could not move downwards because there was no candlestick moving downwards. You get it? So candlesticks make the market move upwards or downwards. I'm not talking of the trend, but I'm talking about the upwards movement or the downward movement. From a point A to a point B, there must be candlesticks moving upwards before the market can move from a point A to a point B. Is it clear? Okay, let's move on. So if you understand this, then it means that for you to be able to buy or sell in the market, you must know what the market is likely to do next and what the next candlestick is likely to do before you can even think of buying and selling. And this is what is going to give you higher edge in the market. So if candlestick make the market move upwards and downwards, then how do you read candlesticks? In the world of trading, mostly we symbolize up candles with green and mostly down candles with red. And the color of the candlestick does not matter. The color of the candlestick does not matter because it can be changed at any time from any charting platform. Like for instance, if I right click, I go to properties, I can change the color of any of this interface you see, so as in other trading platform like TradingView or any platform from any broker which is available to you. So put in your mind that the color of the candlestick does not matter, but what matters is the type of the candlestick. So you must know that, okay, the red candle represents the bearish candle and the green candle represent the upwards or the bullish candle. If yours is blue with red, you must understand, okay, the blue represent the upwards candle or the bullish candle, and the red represent the bearish candle. So it all depends on what you have on your chart. The color of the candlesticks does not matter. Now that we know that the color of the candlestick must not matter, then you must be able to identify a bullish candle and a bearish candle. Let's go to bullish candles. Bullish candles are all the upward movement you are going to see. So for instance, you could see that this candle was a bullish candle because it moved upwards, which means this candle opened from this side. Let me make it more bigger, okay, so that I can see it well. Where is it? Okay, it's here. So it means this candle opened from this side. This is the opening of the candle. The candle closed at this side. That is the closing point of the candle. That is why it's a bullish candle. If it was a bearish candle, let's take this candle for instance. If it's a bearish candle, focusing on this candle, if it's a bearish candle, it means that the market opened from the top, and rather closed from the downside. That's why the market moved downwards. You get the difference. So the color actually doesn't matter, but what matters is the movement of the candle. And if you know the movement of the candle, then you use your color coding to interpret it. Either you're going to stick with the default green, or you just go with a blue, or you just go with yellow, or you go with black, with white. That one is your own preference. Okay, so let's move on. So understanding these candles, how they open and how they close, will aid you in making the decision in when to buy and when to sell. You can also see that on the chart, it's not only these big candles you see. You can also see some small candles around. These small candles can also either be bullish or bearish candles. For instance, when we take this candle, this is a green candle. It is a bullish candle. Why is it a bullish candle? Because this candle opened from this side. It opened from this side and it closed from this side. But why is it having all this long thing? It means the market opened here, but it was able to travel all the way down here. But the price couldn't stay at that zone. So the price has to move back upwards. So the market moved past the opening price. It moved past the opening price and closed above the opening price. So if the market closes above the opening price, it means it is a bullish candle. So this is called wick. It's called wick. A wick is an area where the market traveled, but the price was not able to stay. So this is a bullish candle with a wick. And in trading terms, we call it a pin bar. Let's look at this one. I have one here. So focusing on, let me clean this. Focusing on this one, this is also a candle similar to this one. But this is a bearish candle. It looks red, but from graphically, it looks similar to this one because it has a long tail. But why does it look red? It means from this zone, the market opened from here. This was the opening side, but closed below the opening side. Closed below the opening point, which means the market rather moved downwards instead of closing upwards. If this market closed upwards, it would have been a bullish candle, which is green. But the market opened there, traveled all the way down here, but closed around this side. That is why it is a bearish candle, which means the overall activity that went on within this time was bearish activity. The market was trying to move downwards. But because the market was in a strong trend going upwards, you could see that the buyers were more powerful than the sellers. So the market was able to move upwards. Now let me clean everything on the chart. All these ones must go. They are all gone. Now, aside these pin bars, you can also see a particular bar, like this kind of bar. This kind of bar is called doji candle. Though it looks blue, it looks green, which means it is actually a bullish candle, because for the candle to look green, the software must coded it as it opened from the down and closed above. That's why it considered it as a bullish candle. But in trading terms, we will say doji candle. And why is it a doji candle? Because looking at the size of the body of the candle, it is exactly in the middle, which means both the buyers and the sellers were strong at that particular moment. So doji candle means that indecision. It means the market is not ready to make any decision. Both buyers and sellers are all strong. So in such scenario, if you want to enter at this zone, you have to really watch it well, because you don't know who is strong and who is weak. That is a doji candle. Can we spot another doji candle? This is another doji candle. Have you seen? Which looks red. Another doji candle. Another doji candle. Can you see? This was another one. You can also see another doji candle here. Can you see, guys? So this candlestick keep repeating itself and repeating itself. But you must be able to understand what each character means, so that you can be able to form a nice sentence. Let me give a typical example. Let's take any sentence at all, any English sentence. Let's say, I love trading. So let's say, I love trading. Now, this is a simple statement, but anybody who does not understand English might not be able to interpret it, because the person does not even understand each character we see in this particular statement. But you listen to me, which means you understand English. So when I wrote I love trading, you know what it means. And even you understand the characters and how they are combined. The same happen in trading. If I'm to type any Chinese words here, let's say we type any Chinese word here, I'm sure none of us will be able to interpret any Chinese word in the same mood. I love trading. Somebody may just type it in Chinese and we might not be able to understand, because we don't even understand the individual characters. The same happen in trading. All this chart you see, all this individual, they are all individual characters that form statements. So you must understand this statement and know where to enter and where not to enter. I can see a very typical candle here. This candle is called a bearish pin bar. Bearish pin bar means that the market actually opened from this side. This was the opening. So which means you see that from this zone, the market was trying to go upwards. So the market opened from that side, expecting to go upwards like this, so that we can have a green candle, so the market moves upwards. But I think the sellers were stronger, so they were still strong selling, and the market closed below this side. So now, if the market open here and closes below, then it becomes a red candle. And this red candle is actually very powerful in trading terms, because it's called a bearish pin bar. Bearish pin bar means that there are more sellers. It means price traveled all the way from this side, but could not sustain there. There were more selling pressure, because you could see that all the way from this side, the market was actually trending downwards. So there were more selling pressure, so the price couldn't sustain there and it came here. Or it could either be that professional traders who took their trades around this zone, you see, they took their trade around this zone, took their profits at this side. So after they took their profit, the market became very loose. So which means the market has to play around, because the selling pressure is now reduced. That's why the market was trying to push upwards a little. So you must understand this candlesticks, and you must understand important areas where professionals are trying to trade, and you go with the professionals. This bearish pin bar tells you that professionals are more interested. They are still selling. That's why the market kept going down. So as day traders or as traders, we must understand each of these individual characters. That will make us make better decisions, especially where we are supposed to enter and where we are supposed to sell. When you see a particular candle, it tells you that the market is trying to pull backwards, so you sell and get out of the market. Or when you see a particular entry, it shows you that the market is trying to go upwards, so you buy. For instance, when you see this candlestick, this is actually one of my favorite candlestick patterns, right? So this candlestick pattern in English terms or in language terms can be maybe a simple word, like maybe any simple word at all. Maybe let's say love, L-O-V-E. So we have 3 letters. No, love is not 3 letters, right? But let's give an example. That's just an example. This pattern is called the morning star pattern, because it shows that the market was going downwards, but it's now getting to the morning. It's now getting up. That's what we use in trading terms. But in reality, what does it mean? It means that at this zone, the market was selling bearish, but buyers are very strong here. So this is actually a very strong pin bar. It means Buyers are more strong. You can see that the market opened from here, this side, the downside. But instead of the market to continue going downwards to follow the original trend, the bullish men were very strong. So they moved the price all the way from the down here to the top side. So from the down here to the top side, that's why the market closed green. So it shows a green candle. This tells you that there are a lot of buyers here waiting to buy. And you can see obviously that after that candle, there was a buying movement. So people bought more. You see, there were more buyers here, so they bought it. And what happened? From there, you could see that obviously the market was able to trend upwards. So let's say all those who bought here, you saw this candle, you decided to buy. So your entry is there, right? Your entry is there. And what happened? Your stop loss behind the pattern. So let's say your stop loss behind the pattern and your take profit target is 1:2, and you take your profit 1:2. Then you're out of the market. You see how simple trading can be. But if you don't understand these patterns and these candlesticks, then how do you even read it? Because when you're looking at it from the overall structure like this, it looks very confusing, and you don't know where to enter and where not to enter, what to do and what not to do. So don't read the whole book with your eye, a single eye, but read each single word, each single character, to form each single word, and you can form a very nice sentences, and you can have a very interesting time reading. The same happened in trading. You see, the market kept going upwards. The similar situation was here. You could see the same thing. There was a pin bar. Let me clean all this. You could see the same thing. There was a pin bar, right? This is a pin bar. So market was moving downwards. There was a pin bar telling you that there's more bullish force. The market made a bullish movement. So all those who bought here, let's say after they saw the pin bar, those who bought there, where would they keep their stop loss? Their stop loss will be behind the pattern. So where will be your stop loss? Your stop loss has to be behind the pattern, and your take profit target should be as twice as your stop loss. But you could see that in this scenario, you would have been taken out because this candle came down, bypassed the stop loss, and hit you out. So you would have been hit out here, or even if not here, if you were able to miss here, you would have even been taken out from this side. But mostly you'll be taken out from this side because this one will wick you out. But nevertheless, from this side, you could see the same pattern happening here. Could you see? So the same pattern. Where should you enter? So this one would have been a losing trade. But where should you enter with this pattern? The same thing. When you saw the pin bar, then you can enter just after the pin bar, or you can wait for this confirmation. You have to decide. You can either enter here at the top when you wait for this confirmation, or you can wait for after the pin bar, you can decide to buy. And where will be your stop loss? Your stop loss should always be behind the pattern. Take profit target should be as twice as your stop loss, and you have made your profit. So understanding candlesticks is very, very, very important and crucial aspect of your journey as a trader. And the funny thing is that most people begin to trade not even understanding what actually is on the chart. It's very, very sad that they just open their charts and they start to click buy and start to click sell. And you wonder what they're actually doing and why they are doing that. They have no knowledge of what is on the chart and they are trading. So that's why there's a saying that about 90% of traders fail because they think it's too easy. Is it not too easy to click buy and sell? Yes, it's easy to click buy and click sell. So even your granny in the house, your smaller, your grandma, your grandpa, or even your smaller children can still click buy and click sell. But as a trader, you can't just make clicking buy and clicking sell and make profit. Do you think if it was like that, trading would have still been in existence? If it's easy, like you just click buy and you make profit, you just click sell, you make profit, do you think trading would have still been there? The chart would have still been there to make easy money? There's no easy money in this world. So anytime you are doing something which sounds too easy, it means if you are doing it wrong, either you are going to lose your money, it's like a bait you are going to use to lose your money, or it's something that somebody is trying to lure you to take your money. Okay, so trading it's not just about clicking buy and clicking sell. It's about learning and understanding. And the more you understand these things, the edge you get over the market, and you can now trade successfully. It doesn't mean you're not going to have losing trade. You're definitely going to have losing trades, but in the long run, you're definitely going to become profitable. Like the examples we set right now, you could see that this example was a winning example. You could see that this would have been a winning trade. Let me use this one instead. From here all the way to here would have been a winning trade. This was also another perfect example, but it would have been a losing trade because we were wicked out from this side. But nevertheless, this one would have also been a winning trade. This side would have been here, would have been a winning trade. So the more you understand these things and the more you're able to interpret the charts and trade successfully, that is how you can make money out of the market. It's not easy as clicking buy and clicking sell. So I'll advise everybody listen to me that before you try trading, please, anything you hear, it's not just in trading, in any field at all. Nothing is easy. So anything you hear in any field, either in education, in accounting, in business, in any form of field at all, please seek knowledge first before you begin putting a lot of money on the line or wasting your time to commit yourself into it, because nothing is actually easy. Are you listening to my advice? Are you okay with it? Okay, so you could see that these things make you become more powerful. So you must learn and understand what this candlestick do and what they mean and how to interpret them and at what point should you use them. There's another candlestick pattern here I want to show you. This is called the engulfing pattern. Engulfing means that one candle is eating up the other one to engulf it. That's what it means. To engulf something means you're eating up, you're overshadowing it. Engulfing pattern means that there was a bearish movement, but this bullish candle was to turn around. So you could see that more buyers were in, they turned around, and the market began to trend upwards. So you could see back-to-back green candle. It means there were a lot of bullish people here. After they saw this candle pattern, they all began to buy. So after the candle pattern is formed, you begin to buy from that side. Where should be your stop loss? Your stop loss behind the pattern. Let me lower this. Let me put it here and lower this. Your stop loss behind the pattern. And where should be your take profit target? Twice as your stop loss. So if your stop loss is 100, take profit target should be 200. So let's say you are risking 100. So 100. Then your take profit target should be as twice as your 100. That's what is called risk reward of 1:2. So it should be as twice, which is going to be 200. Let me make this one green so that it looks like that, the profit, right? So this is simple how we trade. So please understand candlesticks and know how to use them and when to use them and at what point you should use them before you can become a successful trader. Do you get it? Okay. So with learning this, I'll just advise you that you go to your charts, open your charts, and start practicing the same thing. Try to see if you can spot these candlesticks because they happen almost on every chart. This Euro USD, AUD USD, you can also find the same similar patterns on almost every chart. Either it's silver you are trading, either it's US 30 you are trading. Any candlestick, any chart at all is made up of candlesticks. So please go to your charts. Okay, just after this video, just go to your chart, open your chart, any charting platform, and try to see if you can spot these candles because they happen almost every time, and see what best and how best you can use them. Okay, so I think that will be all for this video, and thanks for watching. Come back every time to watch such videos. I'm Setowas, and if you like the video, don't forget to subscribe and hit the like button and come back every time. Okay, until then, take care of yourself and see you next time. Bye.